Greetings. We're going to try something new this quarter. We're going to actually film my thoughts on market perspectives as opposed to trying to do a Zoom call with us at times so that nobody has to try to be at their computer at a certain time to watch it. So I think this is something we're going to do going forward, and let us know what your thoughts are. But I'll share my thoughts on the past quarter, kind of what we see happening, and then of course we'll be open for comments and whatnot after you view this. But for those of you that like to read, we'll still have the paper copy of Market Perspectives, but we'll also have the video version. So, well, here we are, April of 2021, a little over a year after we shut down the economy, basically shut down the global economy for COVID. And what's happened, what's transpired since that time, I like to think about what's happened after the dot-com bubble burst and the recessions at the beginning of the century, then the financial crisis, and now, and what are the big differences? I think when this first happened, we had no idea the implications of this, but it's been very interesting to see consumers continue to spend throughout this time period. So retail sales have actually been very good during this time period. So states did not lose sales tax receipts. Another phenomenon that occurred out of this is people wanting a second home, bigger homes, remodeling homes. So there's been real demand for real estate, and real estate prices are up 15% year over year. So property values have gone up, so property taxes have been good. The other thing that was so surprising is actual income. Household income went up for 20, which means that states that have state income taxes also had income increases there. So the states came through this past year in very good conditions, as did municipalities, which with a lot of uncertainty around that. Now, consumers, we've gotten stimulus checks over the past 12 months, but also most of us retained our jobs during this time period. And as I mentioned earlier, household income actually went up. I don't ever remember a time where we've come through a recession where Americans have saved an additional almost $2 trillion. That's not total savings, that's an additional $2 trillion worth of savings, primarily because people just couldn't spend the money that was coming in. Now, as we look at businesses, there have been some smaller businesses and businesses that have been really impacted by this. There has been some relief for those businesses, and hopefully the majority of them will survive this. But because of online shopping, it was phenomenal what we have seen on the retail side. So as we look at what we expect coming out of a recession, typically is businesses to maybe be struggling, consumers maybe to be dealing with debt, record home foreclosures, and we expect to see state and local governments suffering from lower tax receipts. And we're not seeing any of that. Now, on top of that, here we are a year plus into this, and our federal government has approved over $5 trillion worth of stimulus. And I just wanted to put this in perspective, the amount of money this is. If we take what the United States spent on World War II and adjust that for inflation, we spent $4 trillion to win World War II. We will have spent $5 trillion on fighting COVID. I'm not going to get into whether I think it's good or bad, but we have a lot of money that the government has pushed out there and will continue to push out there for the next year or two, on top of businesses being flush with capital, on top of local and state governments being healthy, on top of consumers that have been locked down for a year. In the written market perspectives, I think we will see sort of two phases of the recovery from COVID. This first phase, what we've seen last year, was this online shopping, anything to do with homes, pets. There's been a puppy boom, a pet boom this year. Remodelings, new furniture, new appliances, anything to do with being at home and making it better has absolutely exploded. This next phase, I think, is going to be about experiences. It's going to be travel and leisure, eating out, just getting out and doing things. And I think it's going to be in a big way. We're already starting to see travel pick back up. This past weekend, we actually had almost 1.6 million people on the Sunday after Easter go through TSA. So the numbers are coming back. We're still down about 40%, but we're really coming back on travel. Hotel occupancy is almost at 50%. And Google is seeing record searches for travel. Airlines are seeing record pre-advanced bookings. So I think we're going to see people get out and do things as we go forward. And I don't know that it will just be the end of this year. I think it's going to go well into next year and potentially could go beyond that. We added almost 1 million new jobs in March, and they revised up the numbers for January and February. So collectively, it was about 1 million new jobs that we've added. I expect to see that continue here for the next few months as virtually all the states are reopening. Most cities are allowing in-restaurant dining now. So these are the service people that are going to come back to work. This in the travel and leisure, hotels, movie theaters are even opening. So it's going to be really, really challenging for businesses to get the people that they need to come back. And one of the things we'll see is with the additional unemployment benefits that have been paid to people is, can we get people to come back? So something to really watch when we start having wage inflation. Because I would say that is the talk of the financial world right now is will we see inflation? And I'm not one that necessarily is calling for inflation. I think there's a lot of reasons why we may not have inflation. But right now there's a lot of constraints in many parts of the economy. Anything that deals with getting products from China, there's been a lot of supply chain issues. Right now, just bringing products back into the port of LA, which is the #1 port in our country for cargo containers, ships are sitting offshore 5 to 7 days just to wait to unload. Then they've got to be put on trucks and trains and shipped out, and there's lag time there. So as businesses are trying to rebuild inventories from a super good year last year, there's a lot of issues, and it'll be interesting to see how that plays out. Does that bring about inflation maybe just in some products, or do we begin to see that more widespread? Commodity prices have also increased too, and I think some of that is maybe just getting back to more of a normalized demand for commodities. But we will want to watch those. I do think, though, it's been good for stocks. Last year we saw a really good recovery as investors anticipated this economic recovery. It has really spilled over into the broader market. Smaller companies, more value-oriented companies have done well here more recently, and I think that trend may continue. But I would not expect to see the market have the returns that it's had here recently because it's gotten a bit pricey. Some areas around the world look less expensive than the US. Again, reasons for a broadly diversified portfolio. But I don't want to sound negative. I do think we will see earnings rise, which should help the markets to come up at least with the rate that earnings are coming up. So really it's just, we have come out of this amazingly strong, outside of probably the federal government that has issued record amounts of debt this past year. But again, that is stuff that can be dealt with too over time. So we can maybe talk a little bit more about that in a future call, just dealing with how does the government deal with debt. Obviously, one of the key factors there is going to be keeping interest rates low so that we can afford to pay this. So, but just some parting comments is I think this will be fun to watch people just get back to living their lives again. And as more and more of our country gets vaccinated and as the world then begins to open up, it's going to be fun. Now, because of COVID and because of the ice storms here in Texas, Oklahoma, and Louisiana, there's been some changes with the tax filing dates. So you've probably seen these, but just to kind of reinforce these with you is if you live anywhere outside of Texas, Oklahoma, or Louisiana, your taxes will be due on May 17th. So you have an extra month and a couple of days. If you live in Texas, Oklahoma, or Louisiana, we have until June 15th to file our taxes. And that includes making any payments that you would have due with your income taxes. Now, the first quarterly estimated tax payment, so if you're doing estimated tax payments, the first quarterly payment is due on April 15th. So don't forget that one, because there will be penalties if that one is not done. And if you have any questions on this, please reach out to us, because that's all the end of next week. So again, let us know if you like this format where it's not live, but you can watch it when you like, and give us any comments you have. So thank you, and have a wonderful spring.